Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too. So for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right, good morning, guys. Welcome back to another live stream. I missed CAD CPI this morning. We had a meeting that ran over, but fortunately, there was a big move and we could still talk about it. So good morning to everybody. Good afternoon. Welcome back to another live stream. Again, CAD pairs on the move here this morning. Actually, let me pull up the Oanda version. So CAD yen here made a pretty interesting move. Again, selling off on this inflationary number. We'll get to that number in just a second. CAD Swiss also at the same time, you can see trading lower here this morning. If you're watching CAD pairs, they are on the move. If you're watching things like Euro CAD, here's Euro CAD, right? Jumping big time. Euro gaining some strength, gaining some footing against the Canadian dollar. Here's Pound CAD as well. And you can see there's a theme here, big candles across the board. And you might be wondering, what causes this huge spike in price in regards to CPI? Like, what would get the market to move like this? Well, let's go take a look at the number together. So here are the numbers out of Canada. Today, we had CPI. Of course, it's huge when it's in the US. It's also very important to Canadian monetary policy as well. And you can see pretty much across all the readings, trend, median, and month over month CPI, we had red numbers. And red numbers indicate a big slowdown in inflation in Canada. Now, not only is it a big slowdown, this is a huge slowdown. They revised the year-over-year number down from the previous one. They also came down year-over-year trend and median significantly, right? From the expected 3.3 down to 3.4. And these are big drops from the previous round of inflation reporting. So this is a huge, huge swing in outlook for the Bank of Canada. In fact, what does this tell you about the Bank of Canada? And what does it tell you about gold? I'll tell you what it tells you about gold. It's actually positive for gold this morning. Why? Why is Canadian CPI coming out cooler than expected? Why is that positive for gold? Here's why. It's positive for gold because central banks are like a herd of buffalo. I've talked about this in my streams many times, but central banks around the world, they typically, mostly I'm talking about like Western central banks, like the Bank of England, the Bank of Canada, the Federal Reserve. They tend to move together. Not always, but generally speaking. So to see from the Bank of Canada here today, or to see from the Canadian inflation report that there seems to be a slowdown in inflation, or not even seems, there is a slowdown in inflation, that is going to indicate that the Central Bank of Canada might have some more pressure to go ahead and start cutting rates, or some more leniency, I should say, to cut interest rates. And if the Bank of Canada is cutting interest rates, it calls into question, what about the Bank of England? What about the ECB? What about the Fed, right? What we see is that if we see a trend start where, a couple central banks, what if we get from the Fed? We're still on course to cut rates. That narrative is going to be very positive for the price of gold, okay? So if you're somebody who's watching gold, this inflationary number matters. Even if you don't trade CAD pairs, CAD CPI here this morning, is moving the markets, moving gold, because investors, traders, participants in the market are saying, okay, inflation's coming down in Canada. It could lead them to cut rates sooner. If they cut rates sooner and the other central banks get the idea, like, okay, well, Bank of Canada's cutting rates, let's cut rates. If it becomes a theme, it's very positive for gold. Remember, rate cuts are wonderful for the price of gold because it weakens currency. It weakens, and which of course in turn then strengthens gold, right? Nick, do you think the banks forecasted for the CAD news to be bad? Because I've noticed the banks have been shorting CAD very hard for the past 2 weeks of COT data. That's a good question. Let's go take a look. Let's go look at the COT data. I'm curious. So the Canadian dollar overall on the CAD here is pretty short biased from institutional money. And as you mentioned, you're right, they have been shorting the CAD ahead of this event. Really interesting, because if you had made that move, that was obviously a very, very intelligent move, considering now the Canadian dollar is dropping in value. If you were short the Canadian dollar or buying other currencies against it, right? That would have been a very positive move for you. So, do I speculate that like banks are or hedge funds are anticipating inflation to come down? I kind of do. Yeah, like fundamentally, that's been a theme already in Canada. So we're seeing more of it today, right? Canadian inflation has been missing a couple different times, or like lower than expected a few times here. So yeah, I think that the trend, there's no conspiracy here. There's no like, oh, they knew it was going to be bad. It's, and you said it well, forecasting that it's going to be bad, and or not even bad, just cooling inflation. That's not actually bad news. That's actually kind of good news for the Bank of Canada, right? Because again, their inflation problem is eroding, and that's good for their kind of situation, but it's not so great for the Canadian dollar strength. So yeah, net change was significant. Yes, it was. So very interesting to see that. Again, hedge funds, institutional money, they typically do lean on the side of fundamental analysis. And so they may have been on that theme of, again, cooling inflation in Canada and in other places could lead to, again, a weakening currency, but also strengthening in gold. I think this is really kind of an interesting story for gold today. I'm still in my 2 positions. I took 1 trade back here, a second trade. I'm still just like break even. This thing has been, it's kind of really calmed down. Gold has, its daily range has gone from massive swings to really calming down. But for those of you guys who are watching gold, I have a really simple trade management plan on this one. As long as we stay above this support level, I'm staying in my longs. But if we break through the support level, in fact, if we take out these wick lows, I'll be basically stopping out for a profit. Because again, my entry is back here. My second entry is here. So I would take 1 very small loss here and a nice winner on this one. So it's a good spot to be in. And now the question is not like whether or not I make money on these trades. It's how much money will I make? How much money will the market allow me to make? Because if we push off these lows, let's say that the gold market continues to rally from this, I may get a chance to tighten on my stop loss in the coming days if central banks, and it's really a theme of this week, are central banks going to be more accommodative, that's not a word, accommodative, I don't know, accommodating, that is, so there it is. If they're more accommodating to cutting rates, etc., it should be good for the price of gold. But if they are not, if there's pushback, and the big one is the Fed tomorrow, there's pushback on that, it's going to hurt the story for gold tremendously, because rate cuts are the story for gold. If you're going to get rate cuts, that's going to be positive for gold. If you're not going to get them, or it's going to be some time before you get them, that's not positive for gold. Quick look at the S&P 500 pulling back here today. Yesterday had a big pop, and I think that this is just consolidation ahead of a big event this week. The big event being, of course, the Fed, right? What are they going to say? How many rate cuts are we expecting? Are we expecting rate cuts? What's the reaction to all this inflation data that stayed pretty hot in the US? That's what the market's looking out for. Market's been trending up beautifully, really, really strong upward trend. I'd be very curious to see again how we react to this level if we get some news from the Fed that's not so wonderful. Meaning, if you get something more like the Fed is not going to cut rates 3 times, perhaps they're going to cut rates twice. Some people would argue it's not going to kill the stock market. It's not going to really hurt the stock market because this trend is unbeatable. The AI trade is so strong and it's not super rate dependent, which is kind of true. I mean, it's hard to deny. The bulls have a really, and I am a bull. So let me clarify. I am bullish on the indices. I've just been looking for a pullback, and I think that it is still appropriate to see a pullback if we get from the Fed this week, if we see pushback on rate cuts, right, from Jerome Powell. If he's like, yeah, we're not happy with inflation still staying sticky, you could very well see a bigger pullback in the S&P 500 and still remain overall bullish. Right. So I think that there is a possibility we see a pullback this week. If we do, I'll probably be looking to buy the dips on bigger pullbacks. But I think we're just due for one. We've gone several months without a 5% pullback on the S&P. I've made this point many times, but the last time we had a 5% pullback was October of last year. Right. October of last year, we had a pullback, but since then we have not had at any point, take your pick, a 5% pullback, which is very rare for the indices. And it makes me a little bit nervous. You can see there's been no 5% pullbacks. It makes me a little bit nervous because indices pull back 5% frequently. So for it to never have happened in that period, to chase up here, in my view, is dangerous because suddenly you're going to get a 5% pullback at some point. Might be now, might be later. But I think that you wait for that pullback. In my personal view, I'm waiting for pullbacks before I really touch this. Again, like I said, I've got longs on gold. I've got other things that I'm trading, so I'm in no rush to jump into index trades. Here's the NASDAQ. The NASDAQ kind of on the daily chart looking interesting. You do have price coming down to this support level. And again, I'm also bullish on the NASDAQ. I think I really like the trade here for the NASDAQ, even over the S&P, really, because as I mentioned, that AI concept is not super interest rate dependent. It does become interest rate dependent, though, if the economy really starts slowing down. So let me add context here. Can the NASDAQ come down? Absolutely, it could come down. It could. But I still like the probability that AI is a big thing, that it's going to take over the whole world and all that good stuff. But I do think that longer term, it will be a massive thing. But in the short term, it can get overhyped. And I do think that the NASDAQ is due for a corrective move. So I think that for me, the biggest thing that's going to get me into these trades is not the technical chart, because the technical chart tells me, okay, bullish, right? But the issue with just looking at a technical chart here is that when I go to the top setups page and I consider, by the way, I added these cool things, sentiment, I consider the technical readings, and I look at the economic readings, right? If I don't see confluence amongst these things to get me into a trade, I'm not going to force a trade, right? So under the sentiment section, we have things like the commitment of traders data, retail positioning. Under the technical side, we have seasonality and trend momentum, right? And then under the economic readings, we have everything from GDP, PMIs, retail sales, interest rates. The EDGEFINDER considers all these things. And so if there's nothing for me on let's do indices really quick. Let's go by category. We'll select indices. So if there's nothing here other than the DAX is looking bullish, but everything else is neutral, right? So until we get a strong enough reading, my system tells me no trading these things yet, right? Wait for confirmation. And where are we not getting confirmation? Well, we're seeing some slowdown in the economy. You can see some red over here under service PMI, GDP numbers. There's been some cooling in that. Not to mention, CPI has not been great. We've seen inflation remaining stubborn. So if you ask me, Nick, why aren't you long indices right now? I have a systematic response to you. My indicators here, which are not MACD and RSI, nothing against those things, but respectfully, I think that fundamentals are more important. The fundamental indicators that we look at, retail sales, consumer price index, how is the economy performing? These things are way more important than the MACD, in my opinion. Somebody will disagree with me, but these are things that matter way more to everyday people and hence also the financial markets, right? How retail sales is performing. These things matter. And so for me, I can't get long indices until I get confirmations that there's something to do there. Now, the metals, we can add gold here. Currently, we only have one metal, but sneak preview for those of you guys who are EDGEFINDER super fans, we are in the works of adding more metals to the market. And I'm not just talking about just silver. There's some other ones, platinum, copper. We really want to add these things to the EDGEFINDER, which I think will be really exciting. Anyways, we're still getting a neutral reading now on gold. Now you might say, Nick, but you're long gold. I am long gold. And when I took the trade, the EDGEFINDER was bullish gold. So it's since then gone to a neutral reading. So I'm just trailing stops. I'm not adding new long positions to gold. I'm simply staying basically neutral and letting price action trail me out. So if we go back to gold just momentarily, I mentioned this earlier, but we can pull up the gold position that I have. My stop loss is trailed. So right now at these levels, I'm neutral. So if it keeps going, then great, I can trail stop. And if it reverses and breaks through the lows, I can go ahead and take profits on my position. So that's how I'm playing gold at this moment. Quick look at the dollar index. Dollar index is pushing higher here and actually breaking through this kind of downward trend line that we were as well as resistance points. So kind of interesting to see that playing out here this morning. So yeah, we'll see. Take a look at the yen. Okay, we'll take a look at the yen in just a second. I'll come right back to the yen, talk about this one in greater detail. And in fact, Frank will join me for a second here in just a moment. But before we do that, we're going to thank our sponsor of the show who makes this stream possible. Of course, this stuff is not free to do. We have a team of people, salaries, the equipment, the filming, the streaming, the internet, all that stuff. It's free to you guys. We appreciate you guys watching, and make sure to hit that thumbs up button if you are enjoying the show. But we're also going to really quick thank our sponsor who makes this show possible. So coming in with Frank just after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right. Hey, Frank, how's it going, man?
Good morning. How's it going?
Pretty good. We had a request. I know there's a lot of stuff moving here this morning, but we had some requests in the audience for the dollar against the yen. Frank, we've got a huge week. This morning we had CPI numbers out of Canada. I want to come back to that and how that relates to gold and other central banks. But do you have any thoughts on the dollar yen for the requests in the audience? Any thoughts on the yen in general?
I think it was a very unusual move to see this because the monetary easing was over last
Mm,
night when they decided to end the negative interest rates. So now we're at plus 0.1% now.
mm,
Um, that it's an interesting move. I think that um, what could be happening with dollar yen potentially is that the dollar overall is seeing a lot more strength than I thought it would too.
mm,
I think I think it has to do with FOMC and the fact that the Fed is probably well, first of all, rate cuts are out of the question, and I think it has to do with the Fed probably saying that we'll see higher rates for longer, and investors are probably digesting that now. Um, Yen, on the other hand, they're only expected to have higher rates. If you look at the forecast, it's looking to be higher up until Q4, and our projections on the Edge Finder at least.
mm.
So I'm not quite sure. I have to do some more research on this, but I think the yen is still considerably weak regardless of this. Um, and even if we see interest rates rising and Japan's inflation rate still rising, it's kind of the same. It's not the same, but it's similar to the US as we see high interest rates and rising inflation. That's still weak for the currency, but the dollar for some reason is going higher. I was going to ask you about that um, in regards of it's still very stubborn at its level. I thought it would be sort of making its way down on weak dollar sentiment, but
Yeah, and I didn't actually. I've been out of the loop when it comes to the yen, Frank. Thanks for breaking that down because it is a weird move. They raised interest rates for the first time since I was reading just off screen since 2007, ending 8 years of negative rates amid rising wages and high inflation. So really weird that in response to that, the market here rallied. And like you, I don't know that I have a great reasoning as to why that could have happened. Who knows? But I would have actually expected the dollar yen to drop as the carry trade popularity could be under threat, right? A lot of people, a lot of big money parks, they do a lot of overnight swaps on dollar yen, right? They buy the dollar by borrowing the yen, and they collect a positive interest rate carry for doing that. And so that deteriorating because the yen becomes more costly to borrow is interesting. I don't know. I don't know that I thought for a second, Frank, that I was like, oh, well, maybe just the dollar had some strength. But no, it seems like it literally shot up on that actual news, which is really weird. Like I said, I don't think I have a great answer for that. But
um,
we'll have to do some homework on that and come back with a little bit more detail soon.
I think it's just yen weakness overall too. I'm I know the dollar is coming into play for this pair on UJ, um, but if
Hmm.
you look at other pairs like Aussie yen and Kiwi yen, they are up today as well.
Hmm.
So
Yeah, so it is
that's
yen centric.
I do think that despite the hike, this was a surprise hike. Um,
Hmm.
Despite that, there's still, like you said, rising wages and higher inflation. So that's not necessarily a good sign. If this can fix that problem, it's probably going to be fine for the yen. But right now, we're kind of seeing the same stagflation issue that is a potential problem in the U.S. too.
Yeah, really interesting. And I wanted to also check, let's see, around that same time, did anything happen to the price of gold? And you can actually see that there was around that time basically a sell off that came after the fact on gold. it has bounced back here this morning a little bit. The other central bank, or not central bank, but key economic data point that we discussed here already this morning was actually the Canadian inflation numbers. They came out really, really low. And I was wondering here just before you jumped on, Frank, if this inflation number out of Canada, which I don't know if you saw it already or not, but for people who didn't, we had pretty much across the board a big slide in inflation out of Canada. And these are our northern neighbors. Of course, in the US, we had hotter than expected inflation. So maybe a little bit of divergence in that regard. But it did make me wonder if perhaps this and the RBA, which is reporting this week, and the Bank of England, the ECB, the Bank of Japan, I mean, all the central banks are giving us some intel this week. But this number out of at least the Canadian central bank makes you wonder if they might need to start cutting rates a lot sooner. And we've talked about this, Frank. We talked about how Canada might be the first one to cut rates. And I also was very curious how that would impact gold. It seems to have been positive here this morning for the price of gold.
Yeah, I think it's a good sign that they will start to cut, and gold is not really reacting either way on the daily chart, but it is holding itself above those previous all-time highs at 2148. So it may just consolidate between there and the new all-time highs. But yeah, I do think that's going to be weak news for CAD. But I guess dovish news for CAD. Just seeing that, because the rate at which their inflation rate is falling is more substantial than others.
Yeah, that's a big deal. I mean, we continue to see. I mentioned this earlier. I relate it to like a herd of buffalo. If a couple buffalo start trending in one direction, other buffalo are going to follow them. So I do wonder if that sets a little bit of a theme here this week. And but again, you pointed out what happened with the Bank of Japan. Though the Bank of Japan kind of operates in its own way. It's not really, as I would say, connected or correlated to the other central banks. Here they are talking about raising interest rates, but they did raise rates. Everyone else is talking about cutting rates. I think Canada's a little bit more of an accurate representative of Western kind of central banking trends. So I'm very curious if that sets a precedent. And also, Frank, if here's something to think about. If this week we get something more bullish for the dollar, maybe the dollar CAD is a really interesting trade. Like if you get divergence from the ECB or the Bank of England or the RBA, that's more hawkish. And then you've got Canada, which is going to probably have to be more dovish with these. This is like the back-to-back really cooling inflation number. There might actually be some currency trades on that.
Yeah, I think so too. I think the dollar in general, just against other currencies, is going to be a good trade to the long side. That's, to me, it feels like a short-term move, though. I don't really have a strong bias on the dollar. I still have this concern around what we were talking about for the past several weeks about, falling or poorer economic numbers and higher inflation, interest rates staying high. That combination is just not good for a currency or stocks. So something does need to crack, whether it be the dollar, the indices, or both. So I think in the meantime, you're going to see maybe stronger dollar, but overall, I don't think the dollar is very strong. And even looking at gold, a lot of currency pairs are moving lower that are trading against the dollar, but gold is still holding itself, which is another sign that there's still buyers in this market, even though it's run up. How far has it gone since October, or what was this, February of this year? So this was like a month
that low
time.
February. That's up 10.5%, let's call it, which is
it's
crazy.
A substantial move. I think that investors are are still betting on that concern coming to fruition. So gold looks strong. Oil's doing well
Yeah.
still. And I haven't checked
Yep. And you're
Bitcoin this
long
morning.
oil, right?
Yeah, I am long oil. The ETF of it, though, I'm on UCO at
Very nice. Yeah.
29.93.
I got trailed out of my position on that one, but I'm glad that you're still in it. That's been an awesome move there, and we'll have to see where that goes. Frank, I won't keep you any longer. Thanks for coming on the show and adding some value. We've got a really busy stream week, so I'm sure we'll hear a lot more from you as we get into everything. And thanks for coming on.
Cool. Sounds good. Thank you.
See ya. All right, guys, there's Frank. Frank is, for those of you guys who haven't heard from Frank before, Frank is one of our analysts within the A1 Trading Company, but also inside of our Discord, he shares his trade alerts alongside myself and Ivan. And of course, he's a regular contributor to the show, co-host on the show sometimes. So always good to have his commentary. And if you want to find out more from Frank, make sure to join our free Discord channel. We'll drop the link here in the chat as we're speaking. You can join our Discord and you can keep up with what we're looking at. Let me show you this really quick. So you can keep up with analysis and things being posted within the group. We also share our trades, what we are trading. So for example, we share anything from indices to commodities. I'm trading gold and silver right now. Frank's trading oil. So if you guys would like to get those updates, again, you can sign up for our VIP service, or if you'd like to just check out the free version, we'll drop that link here right now. So here you go. Boom, click this link. And real quick, we're going to do something on stream here while we're hanging out. A lot of you guys are probably newer to fundamentals and trying to figure it out. This is no gimmicks, no false stuff. If you guys are interested and getting started with fundamentals, we've actually built, between myself, Frank, and some of the other wonderful people here at A1, we've built a fundamental analysis course. Now, let me say this genuinely. The course that we've built, many other people would sell it to you for like $1,000. We're going to give it away for free to people who join our Discord channel today. And I'm not pulling your leg. There's no strings, there's no catches. We appreciate you guys watching the videos, the streams, the content. There's 333 people. If you're not in the Discord channel, step one, do me a favor really quick. Use this link that's in the chat. If you're watching back at a later time, it should be found in the description as well. Join the Discord here, and everybody who joins in the next few minutes, we're going to give out the course for free. And I genuinely mean, we could probably sell this course for $1,000 and people would buy it. But we do not sell a course. Our courses are free to people who join our Discord right now. Come hang out with us. Here's how we're going to do it. If you want the fundamental analysis course, 100% free, message Emily here. Okay. And I know someone out there is like rolling their eyes. They're like, no, like it's not free. There's some catch. I'm not even kidding. It is actually free. We will send that to you. Now, transparently, we will probably also ask you if you're interested in any of our services. So you don't have to take advantage of that, but we genuinely will send you the course for free. Here it is, guys. If you just join the Discord server, click Emily's name and just type the word free course. Okay. And she will hook you up. And I'm going to just really quick add that instruction. Send her the DM free course. You got to DM her. And yes, it is genuinely free. Okay, there you go. Enjoy it. And I hope that helps. Let me also, if you're still skeptical, is it actually free? It actually is free, because here's what it includes. Inside the fundamentals course, there's also references to our products like the EDGEFINDER, which is an amazing product that is not free. So what's in it for me? Well, if you check out the EDGEFINDER and you consider purchasing it, it's a worthwhile investment. It's a one-time purchase fee. It's a wonderful, wonderful product that a lot of great people and a lot of great minds have been involved in building. And part of the fundamentals course uses the EDGEFINDER to showcase its value. So it is genuinely a free course, but there is also references to our products. So there's transparently, as 100% transparent as I can possibly be. There's your free course. Okay. My computer is slow here this morning. I don't know what's going on. It might be TradingView or something is loading in the background. I also wanted to really quick, this is our current list for those of you guys who are currency traders. Slightly bullish lean, I would say, to the dollar. Bullish dollar yen, bearish Kiwi dollar, and Aussie dollar. If we take a quick look at add gold in there, as I mentioned earlier, it is in the neutral camp. Could add Bitcoin as well. Bitcoin's also neutral. Oil, I believe, is getting a bullish read. Yep, oil's getting bullish readings, which is great. I mentioned earlier that Frank caught that trade in the VIP room. Yeah, very cool. Also, for those guys who just messaged Emily, if you're interested in getting access to the signals, just ask her about it. She's very capable of giving you some information on that as well. All right, I think that's going to wrap up everything we've got here today. Thanks for the free course. You're very welcome. Enjoy it. Take it seriously. Let me say one last thing before we close up the show. We give that course away for free. It is something that other people would probably charge money for. But here's the thing. Take advantage of it and take it seriously. A lot of times people don't take advantage of things that are free. If you're serious about this stuff, take advantage of our free course and actually go through it. Okay? Really, really take your time on it. Free trial, the free EDGEFINDER version. Unfortunately, we cannot do that. There's too much money invested in building and maintaining this tool to give out free trials. We've done it in the past. It was way more costly than it was beneficial to us. So now what we offer is 30-day access for $199. If that's something you're interested in, you can DM us. We'll drop the link to the talk to really quick. If you guys would like that. You can send a direct message to our team about that. If you would like to get 30 days of the EDGEFINDER, if that's an alternative option to you, just message us here. We'll give you some information about that and you can go from there. But yeah, the course is free, but not everything we offer is free. There's too much cost overhead to what we do to offer everything for free. Otherwise, we wouldn't be here. We wouldn't all have jobs. So anyways, yeah. With that said, thank you guys very much for tuning in to the show. I hope you got some value out of hanging out with me and Frank and everybody else here at A1 Trading. Thank you guys for tuning in. Have a wonderful rest of your day, and we'll see you next time. See you guys. This week, right after Jerome Powell finishes speaking at 3 p.m. U.S. Eastern, I'm taking on a good friend of mine in a trading battle, Boris, who I've done many trading battles where he was the host and I was one of the contenders. But if you're not familiar with trading battles, they're basically where two traders go up against each other and try and make as much money as possible, and the winning amount goes to charity. It's an awesome, really fun event, and we're doing it just after the Fed meeting. And Chris Pulver, a good friend of mine who's on the show regularly, will be hosting the event for Boris and I to go head to head. I've done past battles in the past. You can see here's my gloves to prove it. So I'm really looking forward to this, and I want to encourage you guys to make sure to tune in, come join the action. It's going to be a lot of fun. And remember, it's for charity. So let's do this.